Well, I think blockchain brings a lot of efficiencies to the financial markets. What you're doing is you're replacing a lot of the intermediary functions with a trustless network. In the case of financial institutions, they form what are known as consortiums, where they're then able to gain the advantages of that network without any one of them particularly owning the network themselves. So they're all able to share from it without any sort of individual ownership of it, somewhat like the internet in a way, where everyone can participate, everyone can use this email system, but none of us necessarily own the infrastructure. So in the case of a consortium type of blockchain, what it does is it provides a historical record of events, a historical record of transactions that can't be reversed. So that's what creates the trustlessness of it. In other words, when I do a transaction with you, when I send an asset to you, or I do a transaction, or I create a smart contract, all that gets logged into the blockchain itself. So it's impossible for me to say this never happened. Sure, they can continue on with the way things are, and they'll eventually get disintermediated by the ones who are not. This isn't necessarily the type of thing where you go out and you say, what's it going to bring me as far as an incremental benefit, or what's it going to bring me as far as an incremental cost savings. In a lot of ways, it's a question of, if I don't do this, somebody else is going to, and they're going to gain this massive advantage, and I'm simply not going to have a company anymore. It's going to be a Kodak moment for a lot of these companies. The issue that a lot of companies or a lot of blockchain startups are having is when they go and they pitch this to institutions, and the institutions are then coming back and saying, well, we need everyone to be on this network before we'll join. And in which case, yeah, that's true, you will get massive benefit in that way, but you can get smaller benefits just by connecting a few of these players to start with and start communicating securely between them. So with the network effect, you'll definitely have larger benefits. It'll flow outwards and it'll flow back inwards as far as cost savings to the institutions. But I think you'll also have incremental benefits along the way if you do adopt it. I think it changes like every week in the blockchain world. So I sometimes talk about how when our company, when we first started, we were doing swaps and forward contracts using smart contracts as the escrow for it. Very smart, contract-oriented company. And I say that was a long time ago. That was back in January. And right now it's October. So it seems like a lot has changed in a very short period of time. Now you have banking and financial institutions that are very interested in the technology. A year ago, they wouldn't take your phone call. So things change very quickly with technology. Things change very quickly with institutions wanting to adapt to changing marketplaces. So I think that the biggest adoption is going to be outside of financial institutions to start with. I should say adoption as far as commercial reality of adoption. I think you're going to see financial institutions trialing. They're going to be doing POCs for the next 6 to 12 months, and then they'll probably start commercializing afterwards. You'll see commercial adoption in other sectors. So for example, right now we have Bitcoin, we have Ethereum. These are commercial applications for transferring value. $6 billion in Bitcoin's market cap, $1 billion in Ethereum market cap. These are commercial entities at this point. We're doing digitization of assets. We're doing digital signing on blockchain. This is commercially available now. You can go on Address and start doing digital signing on it. We're doing digital certificates now so that institutions can issue their diplomas and certificates on the blockchain now. So this is commercially available. And again, this is outside of financial institutions because you have a much quicker adoption rate among them. The rate of getting a yes is much faster among these institutions than larger institutions can be. And I think that they see the value perhaps easier than what financial institutions see. Although they might see larger value as far as pure dollar amount, I think the smaller SMEs see it as quicker benefit.